So I'm going to be breaking down my simple trading strategy that I've been using for 8 years. This strategy is called the MSB. It stands for Market Structure Breakout. This is a support and resistance strategy, and it's a very simple strategy for beginners to use. Very easy for beginners to adapt to. It is not no get rich quick shit, so it is in for the longer term play, but you will need some reps in the game on back testing before you become a profitable trader. So let's get stuck straight into the strategy itself. You can see we've got a setup here on Euro USD, which is a live trade at the minute, currently at about 2.5% in profit on this setup. So we're here using support and resistance. This is our support zone down the bottom. We've got a market structure, which is a inverted head and shoulders play out, and then we've got just our push with the MSB. So we're looking for the breakout on the changeover is what we're mainly looking at once it has rejected the support and resistance zones. So we'll jump over to community quickly, and we're going to the classroom, and I'm going to show you some of the breakdown videos we've got inside this. So this is a mix of the free community and the paid community all in one. And some areas are locked if you're not in the paid community. But we actually want to go into the wrong one. We want the full course here, and then we've got a breakdown of everything we've got to master the two strategies. So we're starting with just the MSB, and then we follow on with the MSBC. We won't be talking about the MSBC in this video. It's just about the main MSB strategy and how simple it is to use. So we've got everything. What does it stand for? The checklist, because you need a checklist, and this helps you get your emotions out of the trading so you don't keep fucking up. Then we obviously head over to the patterns we use and the market structure for this strategy. You've got all different sorts of stuff working to the course, and then you've got all our breakdowns that you can see here that we've done on trades I've placed. So let's just start right into it. We'll find a piece of market structure and we'll break it down. What you do need is the check sheet, which I'll show you that now actually back in resources. So you go back to community. And for anyone wants to know, before we get started into the main of the video, you can join the Limitless Trading Club for free and have everything you can see here for free using the link in the description. So let's go down to, we want resources. We're going to come down to the PDF and bring out the trader checklist. And I'm going to open that up for you guys so you can see what that is all about now. So the trader checklist here, before we get stuck into the actual strategy itself, this is just going to hold us accountable to the strategy itself and keep our emotions out of trading. A lot of us traders lose money because we are emotional towards the trades we are placing. We are even placing them incorrectly to our trading strategy says because we think it's a good setup. We're either avenge trading because we've lost a trade, or we're just adding or tweaking the strategy to our suiting, again, to our emotions. So this just helps currency pair. Key level is tested if that's a weekly or a daily support and resistance zone. Then we have the structure. What structure is it? Double top, double bottom, inverted head and shoulders, triple top, all that sort of good stuff. Then what strategy? Obviously, this strategy is going to be the MSB, but obviously we do run both alongside each other. So you can kind of get two trades. That's the key with this strategy or these strategies. We can get two trades in one piece of market structure. So you do one piece of analysis and you can catch two trades inside that using very similar strategies. Then we have some extra confluences like lower EMA crosses and our bios. And then we go into our EMA retests and what the structure is or where it's retested back to the structure. Finally, we're looking for an engulfing candle. That is, we use candlestick confirmation to enter the trade on the 4 hour, 1 hour, possibly sometimes on the 30-minute time frame, and then we just finish up here with our RRR, meaning our risk to reward ratio on what we're getting back from the money or risk we're putting into the trade. Also, if you've got a profit and loss, and if you put the trade stop loss to entry or not, that's a big thing to track, and we promote that inside Limitless Trading Club, is journaling your trades so that you can have data to understand what needs changing or what you're not doing correctly in your trading strategy. So let's get to the strategy itself. Biggest thing with this trading strategy, the MSB, market structure breakout, is we've got to start on the weekly time frame. Yeah, so we're going big time. I'm just going to break down this setup we got here, just because it's already there. But we're marking out key zones, support and resistance zones, that we can see inside the market from previous data. The support and resistance zone, I'm going to break that down now. A support zone is where price is above the zone and it's supporting the weight, yeah? Well, a resistance zone is above and price is trying to break through it, but it can't, but it's resisting that. So we're showing that now. Where you can see current price is, you can see we have support and resistance. So this one up here is a resistance zone up top, which you can see marked. So I mark everything in a nice grey line. But you've got to think about things in a zone, yeah? So just because price has not hit that line perfectly doesn't mean it's not hit the zone. So try and think of everything in a bigger zone gap, but I mark it in lines just to keep the charts clean and clear. That's a very big thing in trading, is keeping everything clean and clear on your charts. So it's very, very simple to see what you're doing. So we've got our resistance zone up top. You can see price come up once. It then dropped back down below that would have been support then resistance and push back up to reject the resistance zone for a second time. So on this setup we have got a bigger time frame double top, but then if we drop into a lower time frame, we're just trying to trade between the two support and resistance zones. So if we come in a little bit tighter, so on a weekly zone we're going to mark out. I'm going to show you how to mark them now actually. So what we're looking for when I'm plotting support and resistance on any chart will be on the weekly or daily time frame. I'm just looking for multiple touches, yeah? So if we're looking here, we've got 1 touch, 2 touch, price broke straight through there, 3 touches, we've got 4 touches there, price did reject it, 5 touches, price did reject it there. If we look, you can see that candlestick did reject it. Come over this side, price did reject it there, so that's 7. We've got 8, 9, 10, we've got 11, so we got 11 or 12, 13 rejections there on that resistance zone. And what that means is we've got a very strong zone where price is finding sensitivity around that in long or short, or buy or sell, is finding sensitivity or a resistance around that zone. And that's what we're looking for. We're looking for rejections of them zones, and then we can catch a trade on the breakout of the changeover. So when it creates a new higher high or new higher low, that's what we're looking to catch a trade from. So now you know how to plot them, and I would say at least it has to have at least 5 touches on previous data to be a support or resistance zone. If you've only got 2 touches on it, then it's not strong enough to be a support or resistance zone, and you need to look back in further data. Yeah, that's the biggest thing. We're plotting support and resistance. Once you've got support and resistance marked out, we're looking for market structure. Market structure is normally found on the daily if it's very big. Normally on the 4-hour time frame is where you will find market structure for the MSB trade. So we'll drop down to the daily time frame. Let's see if we can have a look at anything. First of all, we've got a midway zone here, which you can see price is what we first of all had a inverted head and shoulders on. And then you can see that we've got inverted head and shoulders on a midway zone. Not the strongest, not such as a support and resistance zone, but we've got it marked as a midway zone, and that held as like a slightly bigger setup to our smaller setup. And you understand what I mean in a minute when this comes to it and how this is going to play out inside the strategy itself. So what we then will look for is price pushed above the what would have been the resistance. You can see price here rejected that and resisted this grey zone here, which would have been the resistance zone. Once price then broke above it on the 4-hour time frame or more, that would now become a support zone because now price is above it, and we're going to look to trade to the next zone. One big thing is to do is, that's why I said the 4-hour time frame up, is sometimes when price is rejecting a weekly support and resistance zone, on the 1-hour time frame, it will break above that, but also can break below it and class a rejection. And I'll show you that now with a candle right in front of us. So if I drop down to the 4-hour time frame, we come back over to here. You can see on the 4-hour time frame, price did break above, but then come back. But if we go on the 1-hour time frame and bring it back to where we just was, you can see that price broke above, but then also come back. And again, price did break above. So you go, price is pushed up. It's broke above on the 1-hour time frame. I'm going to catch a trade from here, and then price will actually reject that zone and push back the direction it was looking like on the higher time frames. So always try and be in the higher time frames or for market structure and the rejections of your support and resistance zones. That's why we use the 4-hour time frame and the 4-hour 50 EMA so much in this strategy, just because it makes it really, really simple and easy to use, because you understand it's rejecting something strong and key. So from there, We now marked a support and resistance zone. Price pushed up, yeah? It pushed all the way up and created a new higher high. That's what it stands for, new higher high, yeah? Meaning now we want a pullback into that support zone before then trying to catch the next push. So we're using the Elliott wave 3 pushes. So we got push 1, which is to here. Push 2 will be up, and then we'll have a third push afterwards. And I'll mark that out now with the path, if I can find it. It is there. So you can see we had our first push from here. It pushed all the way up, created a new higher high. Yep, we can clearly see that. Price then pulled back into the support zone and a bonus into the daily 50 EMA. And then it pushed, was what we're hoping to catch and be profitable on. The second push, which could be up to a new higher high, which would be above this previous high here. Then we would get another pullback, probably into the previous high. Very simple. You've seen this before on plenty of other charts, and you will see it on all your charts all the time. It's just knowing when to catch the right push. It's then going to push right up to that as a resistance zone. So we don't need to catch a trade that big because we're already in 150 pips, yeah? And you've got to understand with each currency pair, they push differently. So Euro USD will push a bigger amount per push in pips. So this averagely will do about 200 to 250 pips in one push, where something like AUD CAD maybe only do 80 to 100 pips in a push. So if you're trying to get a 300 pip trade on AUD CAD, that's going to take a lot longer time frame, and also you may get taken out of the trade earlier because price has reversed. Well, with Euro USD, we understand it's slightly bigger, so we're in for 150 pip TP. So that's about a lower end of a push on Euro USD. So now we need to look at the finer details of how to place the trade correctly and get in a good risk to reward ratio and a safe stop loss. So you can see price pulled back. Yeah, we marked that out there. Price then created on the 4-hour time frame another inverted head and shoulders. So now we've got a double bubble here, which makes it an even safer play. So we've got a double bubble, shoulder, push back up, head, and then we had a right shoulder, and they were basically the same length in height or drop down, so that what I'm meaning is when we're marking these out, I really, with a head and shoulders pattern, the right shoulder should be equal to or lower or above the setup itself. So as you can see here, this one was not lower because you can see the left shoulder is slightly lower than the right, but it is equal to in the actual body of the candle. So if we come in a little bit tighter, you'll be able to see that better. You can see that, see this body of this candle and the body of these candles are dead on the same. That's a perfect setup, yeah? So what we're after now, we can write down on our trader's checklist, which I showed you before, got it written down in paper, because I prefer that. And the trade setup itself is here. So what we did, we come along, we've gone along and we've gone Euro USD is the currency pair. Key level tested was the daily 50 EMA and also the weekly support zone. Yeah, so we marked that out. From there, we got structure, which is a inverted head and shoulders on the 4-hour time frame. MSB is our trading strategy because we're not doing the MSBC on this one. Then we just start breaking stuff down, lower time frame EMA cross, and I'll show you that now. So what we fill that back out over here. So we come into the lower time frame EMA cross, and we're going to mark that in there. Is we're looking for, as you can see, 4-hour time frame. So price here, 4-hour time frame here as well. You can see when price is crossing before it then changes. So with the EMA crosses, we're just using them as a confluence. So over data and journaling and time on the strategy, we worked out is if you've got a 4-hour time frame and a 1-hour time frame EMA cross, that just gives you a better probability of the trade going in the direction you want. So that's just data, and that's why we say to journal your trades, especially with the strategies we are now. When you're doing reps, back testing and placing trades, we journal everything down. So we know in our heads, if we've got a 4-hour time frame EMA cross, that's good. So we mark that down, 4-hour time frame EMA cross. You can see that here. So what we're looking for is we've got the head and shoulders pattern. We're now trying to catch a trade from the top or bottom of the right shoulder up to the neckline, and that's the MSB. And the MSBC is then afterwards the continuation or push once it's broken above the neckline and it carries on pushing. The neckline you can see I've got marked in grey. So shoulder, head, shoulder, neckline through your neck. Very simple there set up. And what we're looking for is a trade there. So we're using that, and we're just now going deeper and deeper and deeper on the lower time frames to get a better and better entry, so we can get a better risk to reward ratio. If we go along and just put a 60 pip stop on it, we might only catch a 1 to 2 trade on this, a 1 to 3 trade on this. But if we can have a 30 pip stop on it, we may catch a 1 to 5 trade on this, a 1 to 6 trade. So we're just looking at getting the most returns back from the investment we're putting into the market. So we got that. We now drop down to a 1 hour time frame. So we're on a 4 hour time frame. We'll drop down to the 1 hour time frame now to see if we've got an EMA cross on the 1 hour time frame. Drop down to the 1 hour time frame. We're going to have a look here, and we can clearly see we also have a 1 hour time frame EMA cross right there. So that's now a double stack of EMA crosses. We've got a 4 hour time frame and a 1 hour time frame. So that's looking good. Now we know in our heads, right, the EMA crosses are a good sign that price is now going to return or reject that area and then change the trend it is in. So we're now going back to the 4 hour time frame. We're now looking at a pullback and how far that pullback has gone. So now we go, right, okay, we've looked at it, we've got, it's rejecting support and resistance zones, we've got the structure itself, inverted head and shoulders, we've got the strategy we're using, we've got EMA crosses. We're now looking at the actual, has it pulled back enough, or is it going to, we enter the trade and going to pull back a little bit further and take us out of the trade? Because that's one of the most frustrating things as a trader, is if you've placed a trade and then trade pulls back even further, and takes you out, but then goes in the direction you wanted it to, and you got taken out by 4 or 5 pips. That's when your emotions get the better of you and you start revenge trading. So that's why the traders checklist is here, and that just gets rid of that completely, so you don't get taken out of trades early and you keep your emotions away from your trading strategy. So we're going to do 2 things here. One is the structure or the buyer it's pulled back to. So this shoulder has pulled back into the daily 50. Yes, the price rejected the support zone. So price come down here, rejected the support zone, pushed all the way up and created a new higher high here. It pulled back, pulled back, exhausted, price had a breather. It come back and tested the daily 50 EMA. And also we can use something called Fibonacci, and that's a fib retracement, and that you will find over here on TradingView. Fib retracement. Yours will look a little bit different to mine because I've adapted and modified mine over my 8 years of trading. That's how long I've had the TradingView account, and I've changed that so it's more simple and less colours. I don't like a lot of colours on my charts, just so it makes it clean and clear and makes it easier to trade and more enjoyable. So what we're going to do, you will pull that, not from there. We were going to go out of time frame, back to the daily, and we're going to look at where that pulled from. So with the Fibonacci, we look for the biggest push and we go from the trend it's on. So this here is a bullish trend, so an upwards trend, and you get a bearish trend is a downwards trend. So we're going to pull it from the first bullish candle all the way up to the top, to the higher high. And then that allows us to look at how far it's pulled back. So 100% would be where we started. That is 78%. This here is 61.8%, 50% of the initial run, and then we got 38.2. So 38.2% is the minimum we will take on a trade. So if it hasn't pulled back, so if we, for example, use this here and we just use this candle here, which is an engulfing candle over this, we wouldn't be able to use this because it didn't pull back to 382 fib at a minimum. In this actual trade setup, it pulled back to just over 50%. You can see price pulled back to 50%. So that was a very good one for us. So we can add in, we had a EMA retest of the daily 50. So it pulled back to the daily 50. And we also have a 50% fib. So another double stack. We're just trying to stack barriers on barriers on barriers for this trading strategy. Then we need to fine tune our entry. So now we know, right, we've looked at everything, everything's stacking really, really well. It's all working. We've got decent market structure. EMA crosses, it's pulled back correctly. It's not going to pull back any further and take us out of the trade for no reason. We now need to look at entries, and that can vary, yeah? This setup itself was a 4-hour time frame entry. A lot of the time they are a 1-hour time frame entry, and sometimes I will drop down to the 30-minute time frame entry on MSB, and MSBC can sometimes be the 15-minute time frame. But once you've looked at this and you've gone through the videos, it's a very, very simple strategy to use. So don't forget, once you finish watching this video and you want to learn this trading strategy, you can just head over to limitlesstradingclub.com or the link in description to this YouTube video, and that will take you straight to the community, which you see, and then you can add into that for free, and you can get all of my trading strategies for free. Everything is free. The trading strategies, the psychologically, the emotions, everything else that comes with trading that I use every day is for free. The only thing that we charge for as a mentorship is an actual tracking system where we would have one-to-ones once a month, and I will just track what you need to do and what you haven't done to become a profitable trader. So everything is completely free. So just go ahead, you can use that, and you will understand and make more sense once you start going through all the breakdown videos. So finally, entry. Let's get stuck into it. Drop down to the 1-hour time frame. We're looking for a nice entry, and they are candlestick confirmations. So main ones I use is an engulfing candle. Then we have a high test, then we have an evening star, and we have a morning star, yeah? And I'll show you all of them setups now. So an engulfing candle is a candle that has engulfed the previous candle in a different direction. So right where we are here, this is a bearish, so a big grizzly bear. That's a sell movement. So market is moving in a sell movement, yeah? Then we have a bullish candle, so a big raging steaming ball comes through. And he has taken over, and there's more buyers in the market than there was sellers. And this candlestick here, you can see the bodies. We ignore the wicks for an engulfing candle. The body here, so this is where price closed, and this is where the next candle opened. Price then pushed all the way up and closed above this candle. So this body here is bigger than this body, and that's what makes an engulfing candle. That can be vice versa, the other way around, and that's what we would normally take. That is the most strongest confirmation you can get on a candlestick, is just a really strong, simple engulfing candle. From there, we have a high test, which is something like this. We can see price has rejected that, where price come all the way down and price come all the way back up, and we just left with a very, very small body. Yeah, that there can be a very good entry point, because it shows you there was a lot of sellers in the market and there's more buyers in the market, and vice versa if you're looking for a short trade compared to this is a long trade. If anyone doesn't know what the terminology short and longs are and bulls and bears, you can also find that inside the Limitless Trading Club. What we also then have is a morning and evening star, and what they are is basically we use that as a morning evening star as the sun setting and the sun rising. So a evening star we would have here, price come down, it come back up. We had two bullish candles, and then we had a bearish candle there. So 1, 2, 3, and we have this big high test. That high test is an inkling that price is now moving in the other direction, and we will take that. So for this setup itself, we actually placed a 4-hour time frame engulfing candle, and that there is right here. We've zoomed right in for you can see it. That there is a 4-hour time frame engulfing candle. Price pushed down in bearish movement. Bullish people come in, buyers, more buyers in the market. That engulfed the previous candle, and that was our entry on the 4-hour time frame. So that's how simple the trading strategy is. We start with support and resistance, then we look for market structure, and then we just fine tune our entries till we can grab an entry point. That trade come in, we're currently at 3% in profit at the minute as we speak and take this video. And we have a 1-to-5 risk to reward ratio on it, meaning we're trying to gain 5% back for the 1% we risked. So on a £100,000 trading account, we would be putting £1,000 on this trade and getting £5,000 back on this trade itself. Doesn't mean you're going to win every single trade you place with this trading strategy. It's more of a low volume trade and a high risk to reward ratio trade. So you're placing like 1 to 3s, 1 to 4s, 1 to 5s, instead of something like a 1 to 1 or 1 to 2 where you're placing multiple trades per day. For example, I placed this trade on Thursday last week and it is now Monday morning. So we've had 3 days on this trade and we are just about midway of the trade. So we could be hitting TP tomorrow or it could be at the end of the week. Third and final time, if you want to use the MSB and also the MSBC trading strategies, head over to the limitlesstradingclub.com or the link in description, which Brother Sam will put in when he uploads the video. Then you can have access to both trading strategies for free. There is no upsell on that, not unless you want to grow to be a full-time trader.